So, Greg, nice to have you on the show, man. As we're chatting about recording, there's a lot to talk about in the fintech space and insurtech specifically. I'll ask a very maybe rookie question to kind of kick things off. What is life insurance? What is it exactly?
Life insurance, I mean, you can read a lot of different definitions online, but effectively it prevents you from financial ruin in many respects. And that's the case for a lot of people. If there is some event that takes place that could potentially ruin your family financially, for example, the breadwinner passes away, or when you go into critical illness type options, if you have an illness or a disability, these financial products are basically made, well, to facilitate, I guess. Oh, there's my word jumble right there. I was like, it's just like, well, it's basically meant to prevent ruin. So with like a term policy, you pay to have coverage for a certain amount, and it covers you for a specific period of time. If you pass away and you're not doing anything illegal, it will pay out the benefit.
Yeah. So it's like that's why I guess people call it death insurance in a certain way, right? Where it's like if I pass away, my next of kin or person in my will basically gets an amount X, right? So um, how popular is it as an insurance product? Like, is it like this? Because I know obviously some people are the train of thought where from the moment you're born you should have this, and then a lot of people wake up to it later in life as adults. So curious as to like as a product, when like how is it purchased? What is the typical cycle?
Sure. So I think the most popular that I've seen come across my desk is when someone gets a house or a major liability, and they want to make sure that in the time that they need to pay it off, which is oftentimes decades, like huge, huge, huge purchases, that they have some policy in place in case they pass away, to cover whatever costs are associated with that asset or liability. And it's not just limited to housing. Like we've spoken to clients before who would buy like a very souped up pickup truck, and they would say, it's like, listen, I know I'm a little bit older, but if I die in the next 10 years, I don't want to leave this burden on my wife. These sorts of situations. So, generally speaking, the best use case for life insurance is if there's some sort of asset or liability that you need to have covered. So, in case something terrible happens, you don't have to worry about the financial repercussions. But also, we get scenarios where someone will reach out that had, a newborn or has a couple of younger children, and they want to make sure that in their working lives, if they were to pass away, they'd be taken care of. That's pretty common as well. So they would look at policies like for 20 years, 25 years, sometimes 30, to make sure that in case something were to happen, their family would be completely fine.
Yeah. And give a sense how many Canadians own life insurance today?
Well, it's interesting. It's very hard to say. I mean, the numbers tend to vary, but I heard a stat, and I'm not entirely sure if it's accurate, that something like 40% or 39% of Canadians don't have adequate coverage. Like, it was some dramatic. It was some dramatic number, and the addressable market is quite large. But I think part of the problem is, a lot of individuals don't have someone to talk to about insurance issues. Like sometimes you'll get someone that just became a broker in your family, like some distant cousin. It's like, have you thought about this? And it's like, I don't know if I want to be talking to my cousin about this. And then you look at all the options that are available. Do you go to a bank? Do you go to one of the larger insurance firms? Do you go to some independent broker? What is the difference? Are the prices different? There's a lot to navigate, and it's not necessarily intuitive. But some of these purchases, like if you buy, let's say, like a term 30 policy, I mean, there's a chance that this policy might be with you for the next 3 decades. So, in a sense, it's a pretty serious decision. Even if the cost isn't staggering, it's with you for a long time. So, being able to ask those sorts of questions and figure out, where you'd want to go to get the product that you're looking for. I mean, there's a lot to consider. I mean, banks have it, brokers have it, but if you're going through the claims experience, do you want to go to a 1-800 number with a bank, like, or do you want your children to go to the 1-800 number and get it sorted out that way, or do you want a broker showing up to your house, chatting with your family, someone that might be familiar with you, and facilitate most of that administrative process for you? So there are pluses and minuses of every really any distribution channel that you would go to get life insurance.
And does it double also as an investment vehicle, or is it purely just insurance? Can it take, let's say, I'm depositing $500 a month, for an example. Does that pool of money grow, or does it stay really just like car insurance, where it's a sunk cost?
These products exist, so they're called whole life options and universal life options, and they really are case specific because I feel like every time someone buys one of these products, there still is an opportunity cost. So if you look at a universal life product, there's like a mutual fund component to it, there's an insurance component to it, and the fees aren't cheap. So the question becomes, can you do this separately, and what exactly are you trying to do? Because defaulting it for some people, I mean, just defaulting into one of these products, I mean, it's just easier. It's not a simple product, but sometimes that's just the easiest way of going about it. But it's not oftentimes correct. So I think in going through any sort of needs assessment with a broker, really figuring out what the risk is, the size of the risk, and how long this would be considered a risk is super important. And then the product should really be secondary because in Canada, I mean, we have a very robust insurance ecosystem. We have a lot of large and reputable firms, including smaller ones. They're not bad here either. And in light of that, it's working with a good broker is important. So in looking at any of these products, it's they do have investment components, but be careful because it might not be good for your situation.
Yeah, I want to talk about like what's broken in the process, right? Just because, as someone that has, let's say, a relatively medium or low level of financial literacy, like, okay, why do I need this? It's funny, right? Even this week, I got a call from Industrial Alliance saying, "Hey, I'm your new life insurance advisor, and we should talk." And then we got on the phone, and the dude, very nice gentleman, but like ended up completely confusing me. He's like, "Have you thought of this, tax thing and this?" And I'm like, "I don't know what's going on," right? So like, imagine there's a lot broken in the process. Maybe to zoom back and talk about just how did you get interested in this space? Like, you seem obviously like you know your stuff. How did you like get interested in like insurance specifically?
That's kind of the running joke in the insurance industry, or at least on the distribution side. Everyone always has a story when they end up in this space. Sometimes they stumble into it. Sometimes they make a concerted effort to go into it. Uh, in a strange way, I kind of stumbled into it because I ended up working for a firm that a friend kind of pulled me into. He was working in venture capital at the time, and then he said, "Oh, I'm going to work for the startup that is an insurtech." Academically, I had an understanding of what types of insurance there are and what they can do. But I thought if someone is leaving venture capital to go work at a startup, this really has to be something. So I did that for 4.5 years before we kicked off Dundas Life here. Because it's funny that you give that broker example with that advisor from Industrial Alliance. Because funny enough, we love Industrial Alliance here. I'll put that out there, first and foremost. But I feel like that conversation doesn't happen often enough. I think the problem is you don't have enough advisors going out there and talking to people, and this isn't necessarily like a people problem or an advisor problem. There isn't enough. There isn't enough brokers out there talking to people about insurance products. So, I mean, kudos to whoever that broker was. He's getting out there, and I the conversation's a different story. I can't comment, but uh, getting people out there and like just chatting with people about these issues is huge because very regularly we come across people who reach out to us when it's too late. They either had a sickness or they had some catastrophic event, and it doesn't make them eligible. So uh, I've heard before the best time to buy insurance is when you don't need it. Uh, I think there's some truth in that, but yeah, I ended up in the space. I kind of stumbled into it. I was working in tech. I was working in tech sales. It was going pretty well, and then I thought, oh, this looks interesting. I was curious about fintech in Canada, and that was my first foray. And now, I guess with a couple of the guys here, we run a digital brokerage. It's strange how things come together.
Yeah, yeah, that's a fascinating story, right? So it's sometimes it's a squiggly path. So at Dundas Life, like, you talk about your company that you guys are building. What was the problem that you're seeking out to solve? Like you said, okay, listen, this is a very old traditional industry. How did you look at it through the lens of technology and saying, hey, okay, we can help here, add value to the user experience? So curious as to like the problem that you're seeking to solve.
Well, sure. Like, I think the insurance gap in Canada is huge. And the way it's historically been addressed is, we'll hire some insurance brokers or some financial advisors. We'll train them. Like, they'll go through one of the larger insurance companies. They'll get the training that they need, and then they'll start building a book of business. But what we've seen, at least if we look at the big picture, there still isn't enough. And what we realized here was, if we really want to reach a whole lot of Canadians, everyone seems to have a smartphone. If you can reach them through their smartphone, and at least get that conversation going within one capacity or another. I mean, that's one way of doing it that hasn't really been played out in Canada yet. It's relatively early days. Like even with some of our competitors, I mean, most of them are 2, 3 years old. So this space is very new. like generating a lot of this business online and facilitating it. However, if you're generating the business online, chances are you want to service that business digitally. We certainly do. And we found that the ecosystem there's just a lot going on, and it's just so varied. And some of it is good, some of it is bad. But there, like I'll give an application as an example. Some companies have a very smooth process. It's built for the broker experience. It's built for the client experience. You can take someone through digitally, and then during the pandemic, or at least really in the thick of things, everything needed to be done digitally. But I heard stories from broker friends that told me that when no one knew what COVID was, there was brokers that were going to the client's house, slipping the paper through the slit in the door to get them to sign off on the paper because they needed a physical copy of some of this documentation, like in the middle of a pandemic. And we thought that was a little bit nutty, but that's not uncommon. So when we were looking at the insurance companies that we wanted to work with, it wasn't just strictly about product. I mean, process can really provide an individual, like a consumer, with a terrible experience. If you're being hounded by a nurse for information that isn't really intuitive, may not necessarily be applicable, or at least if the individual can't make sense of it, that's inconvenient. If they're having a hard time getting the information that they need, and you're having a hard time as a broker getting the information you need, and everyone's chasing each other, and there's different pieces of paperwork that you need to get figured out, like, it's just not pleasant. And if you look at, some insurers can be overzealous on that front. They might ask for arbitrary information. Others are pretty easygoing. They'll just say, okay, we have enough. We can figure this out, and we'll take it from there. So when we were picking our partners, I mean, again, I guess Industrial Alliance was brought up. Like, they've been very good to work with. Manulife, Empire Life, like, they've done an exceptional job. Canada Protection Plan, they've done a really good job doubling down and trying to make the digital experience for brokers better, which makes our client experience better. So effectively, the initial problem we were looking to solve is, how do we get insurance in the hands of more Canadians? Because that's a huge problem today. Problem number two is, how do we facilitate that process online and really make it easy for people? But the last point, what could be the most important point, is, how do we provide a qualified experience to these individuals? Because their direct to consumer plays out there, and I do think they fill a role in the market. But for a lot of people, they couldn't tell you for the life of them what half the stuff means. What does it mean that a policy is renewable and convertible? Do I really need this length of a policy or this size of a policy? What happens if I stop paying? What happens after the policy expires? Like, what happens? And I think the job of the broker is to really explain a lot of these scenarios to the individual. But I think more importantly, even when someone passes away, I mean, if you have someone that's navigating the financial and administrative side of things for your clients, I think it really allows them to focus on what matters, like the grieving process and parting with their loved ones, and leave the rest to your broker, because that's what a good broker should be. They should be there when you need them, and they should be very responsive. So the big 3 points is the intake process. We wanted to make sure that we can reach a bunch of Canadians, do it efficiently, and provide them with an exceptional and consistent service. So we're not disrupting anything, so to speak. We're just taking the existing process, and we're trying to add some polish where it could use it.
Yeah, you mentioned you go back to the first point you mentioned, Greg, about signing papers during the pandemic. It was funny. Like, I have a very good friend that works in Sun Life, and he was telling me, he's like, this is like April of last year, like peak of the apocalypse, and he's like, yeah, I have to go to the meet a client and like did a sign papers. I'm like, what? Like, it was this crazy thing, and I'm like, really? Like, you have to meet people in person? Like, it's like, it was this really kind of crazy story. So it's like, yeah, I think we still got a ways to go on some of the process piece you're talking about.
And it's tough. And I mean, I sympathize with any broker that has to do that, because sometimes, if you're working at like a career shop like Sun Life does have some discretion over how you run your practice. So, I mean, sometimes you need to get the paperwork signed off. You got to get out there and do it. But I think in a very odd way, like, I think the pandemic did a lot of good things for tech and insurance, because it needed to move forward in some areas. And in many respects, it did. Like, now it's a common conversation with carriers or the insurance companies, where it's like, how do we improve our existing process? How do we make your life easier? Because if something like a COVID happened again, they want to be prepared. But now I think that this has really come to the fore. I think it's a great time in insurtech for that reason. I think there's a lot of problems that can still be solved.
Yeah. So if I understand this correctly, you guys are servicing the end customer, right? So in terms of, you mentioned product and process, so you're innovating on the process side, which attracts let's say people like myself that would be interested, I sign up, and then the actual product piece, well, then you're working with all, I guess, insurers and reinsurers. Is that a fair assessment of your business model?
It is because we really like initially we wanted to give the consumer the ability to buy insurance on their phone or on their laptop without losing the human touch. And I think it is important to have that face-to-face service within one capacity or another. I mean, ideally in person, that hasn't been a possibility in the last year and a half or so. But if you can still jump on a Zoom call with a client, talk to them, I think that really adds a lot because I think as financial literacy goes, I mean, there's no party in the industry that's better than a broker to go out to people, explain the different parts of the financial system, how it applies to that individual, and what might make sense. The conversation is super important. And I think in this regard, like, yeah, the intake process is important. Like, how do we do that efficiently? And how do we make it unobstructive to the individual so they don't lose, they remain engaged? And then at that point, it goes beyond price. We'll show the individual the price, but usually when we get on the phone, it's like, well, what were you thinking? When someone tells us like, I'm just looking for a good price on insurance, it's like, okay, let's take a step back here. Why are you looking for insurance? So I think, and that just spurs on a completely different conversation. So I think in this industry in particular, and with what we're doing here, the process is super important, and there are a lot of areas to make it more efficient. We've taken strides in that direction, but again, from we didn't want to lose the human touch. We wanted to make sure the broker was there the whole time.
So if I linger on the business model piece then for a bit, so you'll get customers, service them directly, and then work with reinsurers or insurers. And the way, I guess, and correct me if I'm wrong, the way that model works is if a customer is paying X dollars per month, and you take a cut of that every single month as long as that customer sticks around. Is that correct? Right? Like,
Ish. It's a bit of a complicated compensation model in that it's not necessarily intuitive. So there's something called an override bonus model where technically we get paid from our managing general agency, so like our administrator, like a gross oversimplification, but our administrator, and then they get paid from the insurance company. So what happens is these managing general agents, they basically aggregate volumes so that if there's like 100 or 1,000 or 10,000 advisors, they'll all funnel their volumes through this managing general agent because the managing general agent has a direct relationship with these insurers. It's rare that an advisor would have a direct contract with an insurer. They would need a lot of business consistently every year. Like the carrier has requirements, and it's difficult for one broker to fill. That's why everyone kind of goes into managing general agencies. They negotiate their rate. And when a piece of business is submitted, the insurance company pays the managing general agent who pays the broker. So it's a bit bizarre. What you were describing actually kind of strikes me as intuitive. That's what I initially thought when I joined the industry. But usually the commission is paid lump sum up front. And then the individual, like if they cancel within 2 years, there's a clawback or something like that. So you want to be selling good business. But that's generally how the compensation, I guess, structure works in this industry for life insurance specifically.
because here, I guess your point of advantage is that you own the customer relationship, right? So that does that open up any possibilities in the future to basically grow your margin, being able to sell like higher value products, or even eventually, your own insurance? Like, is that even maybe too far off as a wild idea?
No, it's not, and it's really interesting because we're seeing that a lot in the United States. Except it's not an easy proposition. So if someone is starting an insurance company, and this has happened a couple of times in the States, you require a lot of capital. Like you need to be sitting on a good chunk of capital, but you also have to have the expertise in manufacturing some of these products. Like a reinsurer can help, but there's a lot of responsibility. If you're running an insurer, I'm not even entirely sure if a venture business is the right one for something like that out the gate because like if you're buying an insurance from or an insurance policy from a venture-backed insurer, what guarantee do you have that that company will be around 10 years from now? It's hard to say. But the distribution part of things is like, yeah, when you have the client relationship and you're a good broker, especially on the life insurance side. Very often we refer off business to wealth advisors, property and casualty people. So whether it's home or auto insurance that comes up, a lot of health insurance comes up, travel insurance. We get a lot of those inquiries where we can just send some of the lower margin business, like health insurance in particular, doesn't yield us a lot. It's not a core competency. We'll send that off to another broker. Like if they're willing to take it, but there are platforms online that will facilitate that entire transaction. Like Manulife's Cover Me is excellent from what I've seen historically, and they can take themselves through it. but the same challenge persists where a lot of people have questions around some of these products, except, for a brokerage, it's like, well, do I really want to be going out of my way to sell my client a health insurance policy? To maintain a good relationship, you might, but at the same time, it's very low margin, and I think that's it. Kind of leads into an interesting scenario in that what I've heard historically is like, oh, you have these insurance brokers pushing these products to these individuals, and they're not the optimal solution. They might sell them one of these insurance products that's bundled in with an investment product. But what I find now that I've been in the industry for this length of time is that it's not ideal. There's no doubt about it. And like something should be done to fix that. But what I also find is if that person doesn't position whatever that product is, rarely is there someone like a wealth advisor or bank talking to these individuals to fix these problems. So I think it's not an intuitive problem, but it's one that's huge in Canada. Like, where does someone get reasonable financial advice? Because generally speaking, even on the wealth side, if someone doesn't have a significant amount of savings, they're not going to make like a wealth manager is not going to make a lot of money off that client. And I think platforms like Wealth Simple, Nest Wealth, Just Wealth are going to be so important in the coming years because it does make it easier to save. It does make it easier to invest. So went off on a bit of a tirade there, but yeah, I really wanted to point that out because I feel like a lot of people look at insurance brokers like, oh, they'll try upselling me or cross-selling me or something like that. But what I found, we deal with huge volumes. We don't have to. But what I find with regular brokers is there's usually no alternative there to talk to them about the more difficult product discussions.
Yeah. How would you say your advantages today? Is it with the technology that you're providing, the platform that you're building, or is it on the service side because your years of experience? So like trying to understand, are you looking to ultimately the question we're trying to get to is, are you looking to become venture backed, raise money and try and go big? Do you see that as an opportunity, or just building kind of slow and steady, adding more brokers and having more the human personalized side?
Yeah, it's a good question. It might be a combination of the both because initially we knew what we had. We had really good marketing expertise in house. My colleague Martin is excellent at what he does, and we thought we had and my other colleague Steven Sinclair. I mean, he's one of the best brokers I've come across. Like I used to work with brokers for 5 years, and Steve Sinclair was by far one of the best. Exceptional guy, very personable. And I thought, okay, I have these two great resources available to me. So if one can chop down the lumber and the other can process the lumber, like you might as well set up a lumber mill. It was kind of like that in the insurance space. Martin in marketing could drum up a significant amount of qualified leads. Steve did an exceptional job servicing them. And then at that point, it became a question of, okay, how can we do this better? How can we do this more efficiently? What can we avoid? What can we automate? And then I got, cross the river by feeling the stones was kind of the outlook because given how regulated insurance is, we wanted to make sure that we were on the right side of of compliance and on the right side of the regulator. So there was a lot of work that went in gradually. But it's been going in the right direction. So, I mean, we've been in business for about a year now and things have been going very well. Like Steve is a high producing advisor. Like we've been funneling a lot of the business through him, but that was part of the growth experience. We wanted to create such a tight service model in that anyone who requires servicing gets it very quickly and gets very good service, but also that our brokers aren't saddled with unnecessary administrative work. So, I mean, from a funding standpoint, for the time being, it's been self-funded. We've been selling a good chunk of insurance and we've been putting it back into the business to solve these incremental problems for ourselves. What the next year looks like, it's difficult to say, but I've largely been operating on the operations and sales side, driving business to Steve. But now we've hit a point where we're hitting critical mass, and now I need to get involved and start selling directly. But like even in the last quarter, we've made huge strides from a process standpoint, and what we have in the roadmap for Q4 is really going to blow things out of the water. So very exciting time here. But when it comes to funding, we're going to keep it self-funded for a while. I think we've spoken to a couple of parties, but what I heard from a mentor was, he built out a property and casualty business. You sell a home and auto policy, you'll make 50, 100, 200, 300 bucks maybe. And that's recurring every year. So it's a good model to get venture capital. For us, all of the commissions are front loaded. So it does make it a little bit easier as long as we're patient to build it out. And that's exactly what's been happening over the course of the last 12 months.
Interesting, interesting. Yeah, like what do you see happening in the industry that excites you, like from a business model or just general technology perspective, like even life insurance? Like if you zoom out and you see other markets, what's most interesting, most dynamic?
Whew, there's so much. Like, there's a lot that needs to be done, and I think there's a lot of smart people working on a lot of these problems. So for one, I think kind of veering out of insurtech, I think what the initiatives that are taking place in setting something up with open banking, I think has been a long time coming. I think this kind of infrastructure needs to exist. And I think it's been incredibly difficult to do anything or build anything in some respects because it's just the technology is non-existent, or you have to navigate a regulator. It's just complicated. So I know that especially the Wealth Simple folks, they've really been pushing that over the course of the last couple of years, and it looks like they're actually getting some pretty meaningful traction. I saw that Chrystia Freeland made an announcement a couple of months ago around it. So it looks like things are going in the right direction. How quickly things will move and what will get done in the next year, hard for me to say. That's not really the ballpark I play in, but it is exciting because I think ultimately it's going to help the consumer get better options, or like better options are going to become available and they'll be easier to access. On the insurance side, there's a lot. Like we're seeing all kinds of interesting things in the sense that you know and it's not all cutting edge stuff. Like we're seeing good insurers starting to do they're starting to do decent, they're making decent efforts in digital. I mean, some of them have been doing a really good job for a very long time. Like I think Empire Life is a great example of that. They have a simple e-application. It's intuitive. It's clean design wise. Like it. If you told me that a broker built it out, I'd believe you. It just makes sense. It's easy. It's intuitive. But now I think the direction that the industry is going in, I think a lot more is going to be API enabled because historically, like this infrastructure kind of exists, it kind of doesn't exist. Sometimes it's internally available, sometimes it's externally available. But now we're seeing things really move. So, like recently, we saw Flinks get acquired, or I guess acquire a larger stake in, or National Bank acquired a larger stake in Flinks, which was like an API type company that does a lot of work in the financial space. So that's interesting, but I think the being able to get the data to flow from one point to another securely within the financial system is going to allow a lot of companies to do a lot of good, startups and incumbents. And I think as long as the client data is held in the highest regard first and foremost, and something is built around it to provide a good service, I think it's going to be great. It's still very early days. Like I don't think I'm giving anything concrete here, but the sentiment seems to be there with the regulator. The larger insurers seem to be their distributions all over it because anything that can help them service their clients more efficiently is obviously welcome. But I think, yeah, with what's happening in open banking, I think that's very exciting in Canada. When it comes to what some of the insurers are doing from a technology standpoint, it's moving in the right direction very quickly. Um, but what we're seeing in the US, especially with like setting up new insurance carriers to compete with incumbents, I find very interesting because it's not easy. But you can see there's a thirst, there's a hunger for that kind of competition. And I think it's putting some incumbents on notice. It's like you're going to have to become this easy if you want to compete the next 10, 20 years for the share of the pie that you've held for the last few decades. So I think there will be some turbulence in the coming years. What it's going to look like, it's still early to say. But I think between open banking, some of the carrier initiatives that are taking place in the US, and what some of the insurers are doing in Canada, I think there's a lot to be hopeful about.
Yeah, no, it's definitely exciting. And is the plane of competition changing because of technology mostly, or is it because of decreased regulation? Where I think the regulation has been so stringent, like you mentioned, particularly in Canada, that I think regulators are like pushing to like make it more competitive, or is it more, I want to say, technology, user experience, stuff like that you guys are doing at Dundas Life that are pushing the needle?
Well, it's a really good question because I think one of the challenges with technology in the insurance space specifically is that there's still a lot more that can be done. The problem with what we're doing over here in distribution at large is that there isn't a lot of new talent showing up, not as much as has been showing up historically. So one stat I can throw in your direction, I'm pretty sure it applies in Canada, but it's an American stat. Your average financial advisor is 60, 61 years old, something along those lines. A lot of people are within a short leap away from retirement. A lot of people will stick around, but they're not that far. So if you're dealing with an advisor who built out their book of business that's doing an exceptional job, a lot of these advisors are still doing very good business on paper. And I think because that's where a lot of the money comes from when it comes to larger estate planning cases, like just really difficult cases, it's still done on paper. There a lot of focus has been on how do we keep these folks happy. Whereas when it comes to transact, like providing a good service to someone whose need is well, simpler, you need a 20, 50, $100 a month policy. I think there hasn't been much of a demand because there hasn't been a lot of people in the industry who were kind of born and raised with that. The folks in the industry tend to be younger. But even then, like a lot of insurance brokers, they're very sharp people in that a lot of it is done on a contract basis. Like a lot of them, the independents especially, they run their own brokerage. So they're business people. If they see something working from a technology standpoint, I found that they're pretty quick to adapt. It's just the question becomes who's responsible for providing them with this technology. I think this has been the big structural issue here. Is it the managing general agency who administers all of this? Is this the insurance company that provides you with the product? Or is it down to the brokerage? Sometimes a one-man shop in the middle of nowhere, and it's like, well, what, you expect me to build software? It's like, that's not fair. And it isn't. I don't have an answer for you here either, but I think the real push has been, looking at the next few years, a lot of people are going to retire. And I think the clients in particular are looking for a simpler underwriting experience and an easy intake flow to get product. I think a lot of that is client driven. It's just an expectation. I mean, do you really want to be filling out a paper application if you're buying your first house at the ripe old age of 28? Probably not. So I think facilitating what the client expects is becoming important, and the client is becoming increasingly sophisticated from a technology standpoint. And now I think the insurance companies are trying to think, okay, in light of the regulatory environment we have to work within, how do we make this happen? I even think the regulator has been doing a reasonable job accommodating, but I'm very excited to see what will happen in the future with that as well. But I think it's a combination of things. I think a lot of advisors are getting older. I don't think as many are joining the industry. Consumers have demands. So tying that all together, these are the things that are driving a lot of the change, I think.
Yeah, and it sounds like you guys are going to be well positioned for those big changes.
Yeah, it's interesting because yes, for sure. I mean, like I don't intend on going anywhere anytime soon. Like I love the industry, I love the people, because it's all very client driven. Like there's a lot of good people in the insurance industry, but there's a lot of work that needs to be done. Because there's, a lot of it is built for security and as it should be, but there are simple things like e-signature that haven't been standardized in some parts of the industry that should be, or sending off specific forms. It can only be done on things like, okay, you have to do it through Adobe, you can't do it through DocuSign, and that causes a bit of a headache. Or, okay, you filled out this life insurance application, but you need to send in the life insurance replacement disclosure because you're replacing some other policy by paper. It's like, well, this is kind of silly, isn't it? It's like, well, it is, but it is what it is. And is there anything that we can do about it? No. But we can provide feedback to our insurance company partners, and tell them, here's what's working, here's what's not working, and then just approaching it with good faith, helping however we can, for whoever's seeking our feedback, advice, or even capital where it might be required. Like we're willing to put our money where our mouth is to fix some of these problems.
Yeah, amazing, Greg. This has been such a blast. Like I find having smart people like you just helps me learn. I'm like, okay, I think I know more about life insurance now than before. A final question for you would
Sure.
be just where people can connect, learn more about what you guys are building at Dundas Life, and if they want to get in touch.
Sure. I mean, I'm an open book when it comes to LinkedIn. Just shoot me an invitation. I'm happy to chat. Or even if you go on dundaslife.com, if you navigate through there, you'll find me in there eventually. Like I will see it come through. Though it's one thing I will mention to kind of to refer to your previous point there. Every time we end up at a tech event, or every time we end up at like some non-insurance event, we always have people asking us about their life insurance policy or life insurance policies that they're looking at. We don't go out there pitching or anything like that. We just say, hey, we're insurance brokers and we're building out some technology to facilitate this. And they'd be like, well, listen, I got this old policy. Do you know anything about this? Like they'll talk about a company that's been, acquired in the past, something like a Standard Life or something, or they'll say, oh, my sister has this experience, or we just went through this claims experience and we weren't sure what happened. It's kind of crazy how quickly a lot of these other conversations get hijacked by insurance because it doesn't come up that often.
Yeah, and maybe last question I didn't ask you was, so obviously you're in Toronto, Dundas Life, like kind of a big street. Is that just like how'd you come up with the name? Was it just like wanted to like put a stake in the ground and say, hey, we're from Toronto, or is there a funny, quirky story?
There's I live like a block away from Dundas Street. And it's such a strange story because when we were discussing, we're like, we just want some name that's very Canadian almost. I mean, there's the town. If you go down to, I don't know if you're in Vancouver, like on the West Coast, there's always a Dundas Street somewhere. And the really funny thing was, yeah, there's no deliberate effort on that front. It was just like, hey, this sounds kind of Canadian-ish. Like we're not. Apart from my colleague, we're not really marketing people. The initial thought was, what would work, and we thought, hey, this is the neighborhood that we come from. Let's just do that.
I like the name. I like the name. It makes me want to go back to Toronto. So, Greg, this has been a pleasure, man. Thanks so much.
Yeah, 100%. Those have been great.